Hello viewers and welcome to this video. As you can see, I will continue trade I started a couple of videos ago and discuss historical trends in financial markets, and to be precise, commodity markets are my first sector of market which I am analyzing. And if in previous videos we looked at gold and oil, now we will subsequently moving to wheat. Now, wheat might not be the most popular market today because of the developments in financial markets and whatnot. Other markets such as forex and crypto have become way more popular, but that doesn't mean wheat is a bad market, because firstly, it has been historically one of the more popular markets ever, and secondly, it has crucial importance because it's backbone of world commodity trading, and everyone who produces or uses crops for their business has to look at wheat prices in particular. So it will give us a good benchmark how financial markets has been moved through history in the same way as it was in gold and oil. So with that said, let's start to look at wheat markets in broader charts. And this is, we could go back all the way until 1970 and see first historical trends when trading started to become big business. That was these precise markets when wheat went from 1400 to from bushel. The wheat has slightly different way of measuring value. It measures not tons or something else but bushels. So I don't know if that matters to you, but this is the fact. Yes, it went from 140 to 600, so pretty good uptrends as well. Yes, and then it continued to trend all the way until late 70s. Those inflationary markets made forced fortunes for modern day traders. Many good stories out of these markets in the wheat, corn and soybeans were made. I could tell them another day if you like, but let's continue onwards, and we would see that wheat continued their up and down movements across decades, like now from mid 77 up until late 80. It slowly but steadily rise and then continued its downtrend up until late spring 86, from 544 to around $250 per bushel. Then wheat stabilized and didn't do much interesting for about a couple of years. Then it moved in one downtrend and then ranged for extended period of time from 90 up until 95, when it spiked in early 96 and then went downwards from 640 up until $250 per bushel, where it stayed from September 98 for 4 years. Now, if you only traded wheat, you probably were forced to trade in very narrow range from 300 to 230. Now, it could give profit opportunities for small time frame traders, but for long-term trend followers this was not that great. But things started to improve, as you see here. In early 2000s, precisely June 2002, it went from 270 till 430 and bounced in this range up until 2005. And at late 2005, wheat, as with other commodities, started to rise and spiked in early 2008 up until 1300s. And then with financial crisis it fell back to $420 per bushel, and then it continued its choppy movement in subsequent years from early hundreds till around 900, and then it bounced in that range up until, I don't need that, excuse me, up until 2014, when commodities climbed downwards and it bottomed around $400 per bushel. Then it grew up until late 1300s with fears of global food disruptions due to the war in Ukraine, because Russia and Ukraine are major grain exporters, and if those ports are blockaded and all trading in Black Sea is halted, then we have serious food shortages. But since they were resolved, grain prices fell back in the more reasonable and sustainable levels. So these are long-term trades, which clearly indicates us that despite everything you might heard about efficient food production and whatnot, but still grain markets are trending just as well as any other markets. So now we will look at daily chart, and we'll skip for like a couple of years just to illustrate my point whether the markets are tradable or not. Let's see, I don't want to waste your time too much, but let's just see from early 2013, because I remember those markets. I watched wheat very closely at that time, and I remember those downtrends and uptrends. But nevertheless, let's start, and we see more realistic charts, then it continue nice stable downtrend, which gave small but stable profit opportunities for everyone who traded it. There was nothing much to do but to slowly make money. And then when wheat went nowhere, you kind of went break even, and then fortunes reversed, As I'm always saying, those charts has to be looked at with a grain of salt, because every chart is skewed somehow, and the real performance are therefore distorted if you don't look seriously at those charts. But here you can see that from summer 2016 till summer 2018, or at least autumn, prices went nowhere, so there wasn't much to do, just to stay break even. And from 2019, slowly but steadily prices spiked, and yes, as always, you could lose a couple of bucks in the ranging markets, but in trends you made it all back. So with that said, let's see how it would perform and how much you could make at bit shorter time frames. So let's see a couple of 4-hour trade examples now. So how many? Let's go to 2019. Okay, these are those ranging markets which I showed in previous charts, and yes, as you see, there are a lot of whipsaws and a lot of false trends with very short trading range, so you wouldn't be making much or losing much either. You'd just be extremely bored for extended period of time, like half a year. But nevertheless, there were a couple of small trends where you could made back that losses in steady fashion right up until 2020, when markets, I haven't checked that in COVID times, but the spikes in the grain prices were not that large if you compare that to stocks or oil. But nevertheless, yes, there were small profit opportunities, and eventually some of the larger trends prevailed, and you could making small but consistent money in all of those trends. As you see, there are several small moves with not that many whipsaws, so these markets would give you some profit, but it wouldn't be that large as it was in oil or gold. And for the last few years you actually would make those small profits, with exception of early 2022 and summer of 2022, when larger trends prevailed. So what I could say here, now the trends were not as huge as it was with oil and gold, but they were all on a more consistent basis, because you have to take into consideration the nature of markets and excuse me. And the fact the way these future contracts are set up with grain markets, it's a bit different than it was in oil and gold, where you have more or less stable markets each year, because in grains you have to take consideration healthiness of crops in all major regions where they grow crops, stockpiles of existing crops, diseases, trade embargoes and whatnot, because due to those factors wheat are more, it's more subject of spikes and very flat markets for years. So it's more in the nature of wheat, corn and soybeans to be very flat for sometimes, but when something bad happens they spike. In oil or gold, the capital flows are more diverse and there are a lot more players out there, even though everyone might argue differently, but it is fact. And therefore the prices are more smoother, they are going in more smoother direction comparing to wheat, because especially if you look at the shorter time frames, I could show you this example. As you see here, I don't know how much it could really be seen on charts, but markets here are moving in moves which is called limit ups or limit downs, which means you actually couldn't trade those markets because futures markets lock when there are extreme rises or extreme falls in prices. And that means that many of those opportunities which are in extreme spikes are not that tradable in a convenient way. If you want to make money on that, you have to trade options or calendar futures spreads or do some more specific things. And that's the thing about wheat. I wouldn't recommend this, not necessarily as primary market for trading in classical sense, but if you understand options and how futures spreads works, then this is a very interesting market. But nevertheless, wheat has produced good trends, and for traders it could balance out your portfolio very well, because it provides uncorrelated returns with global economy, other commodity cycles and currencies. So it is a good and important market and you should watch it. And thanks for this video, and make sure you follow me on all social media. Till next video, bye.